Okay, so I've been asked to discuss Bollinger Bands. How many of you are using Bollinger Bands? Let's start off with something simple as that. How many of you are using Bollinger Bands? And generally, what time frame would you use your Bollinger Bands? So it is often, in my opinion, used on much lower time frames. So let's start with that. It's used on much lower time frames. I would not be applying Bollinger Bands on the daily, the 4, the 1 hour time frames. I prefer the 15, 5, and the 1 minute time frame. Okay, so let's start with that. What is this? Okay, so yes, so we're on the 1 minute time frame, and let's apply the Bollinger Band. I do have it already there, so okay, right. So that's my Bollinger Band. Okay, so what is the Bollinger Band? That's the sort of key question over here. So I'm going to highlight some of the key points. But before I do that, I just want to sort of, mention the Bollinger Band is measuring the volatility in the market and is a way of trading the volatility in the market. Ideally, it's better suited for reversal setups rather than trend trading. But there is an option where you could trade it with the trend. Um, but the but what we're generally want to see is volatility in the market. But do remember, when you see a very narrow range with the bands, you want to stay away from it. Yep. So quickly filter through the assets you're viewing, such as this. So when you see very little sort of movement taking place, and the bands are extremely tight, you'd want to stay out of that market until the breakout takes place, or there is a significant amount of market movement taking place where the bands are wide enough where you can trade the reversals. Okay. So I've got a list over here of the key points that I wanted to sort of discuss. Okay, so let's start off with, how is the Bollinger Bands displayed? So the middle line, so this middle line over here, it's a simple 20 period moving average. Yep. So all charting packages will have a moving average. So all we're seeing is a moving average over here. Generally, it's set to, let's check the settings on this actually. Oh, show it up. Okay, so let's change this to now 20. So general settings are at 20 and 2. Okay, so 20 period moving average, so it's looking at the last 20 days worth of closing prices of these candles, and then it divides them by sort of the 20 with 20, and then gives you the average of where price should be. Okay, but in addition to that, we have the upper band and then the lower band. Okay, so the upper band is calculated based on the value of the middle band plus 2 standard deviations. Okay, and the lower band is the moving average, the current moving average, minus 2 standard deviations. And with 2 standard deviations, what we're seeing is that it includes. Let me see if I can bring up sort of the bell curve standard deviation. It includes 96% of price. So if I just bring this up over here. Okay, let me just bring that into sort of this range here. So there we go. So this is what we're seeing over here. So it's sort of from the mean, from the midway point, we're seeing how much of price is going to incorporate. That's how the bands are set to. So from the mean, so from the moving average, it's going to incorporate an upper and lower band, which comprises of, in this case, more than 96%. So 96%, which is that 2 standard deviation part over there. Okay, that's the. So it's a measure of volatility, but it's also not fixed. So if there is more movement in the market price, then you'll see larger bands. If there's less movement in the market, then you will see tighter bands, which is a benefit, right? So as you can see in this region here, larger movements of candles, large candle formations taking place, and you're going to see the bands widen. In this case of here, very small candle sort of movements and sizes, and therefore the bands are quite close to each other. Okay, so that covers that part of it. Now, what settings are used? There are 3 settings I've used, and this is from personal experience. Ideally, I'd want you to test out different parameters. The standard one is 20 and 2. I have traded this 20 and 2 in the past before. Just looking at the extremes. One of the assets I actually used to trade this with there were 4 assets I was looking at. I was looking at cable, euro dollar, and the FTSE 100 and the German 30, the DAX. Those were the only 4 that I traded. And because I knew sort of about the correlation between the industry and its currency, it led to some great setups there. I remember that I achieved in 1 month, it was about 17%. I had a return of 17%. And if you saw the hit rate on this, it was actually only 2 trades that were the outlier, which made most of that capital. That just went in my favor significantly and had such a great reward to risk on that. But yes, so those are the 4 assets I traded, and the parameters that I've gone through is through trial and error. So I started off with 20 and 2. There was a time where I was looking at 20 and 2. I also used 34 and 3 standard deviations, something similar to this, looking for more extreme movements in prices. So instead of now me looking at the last 20 candles, I'm taking in the last 34 candles, right? So you can change this to 1 minute, 5 minute time frame. It depends which time frame you want to manage this on. So a good setup for me is something similar to this, right? So you have this strong impulsive break out of the Bollinger Band, or running up the sort of the Bollinger Band. You have this very nice sort of candle formation. Let me just zoom in. This candle formation over here. It's a long leg. Well, I wouldn't say long-legged doji because open and close needs to be at the same level. So you can almost say it's a long-legged spinning top, right? And then we have this strong bearish candle which closes just below that previous low, which leads to the next move lower. Okay, so that's another one. But I also have used 60 and 3 standard deviations on the 1 minute time frame. And I did like these settings, right? So what I'm now looking at is not 34 candlesticks. I'm actually looking at 60 candlesticks, but on a 1 minute time frame, that's 1 hour's worth of data. So I'm looking at 1 hour's worth of data, and I'm much wider with 3 standard deviations. So I'm looking to sort of I'm looking at prices to stay within this zone 99% of the time. Only the sort of 1 or 2 outliers that really go to these extreme levels, those are the ones that I want to capture. Okay, which you can see sort of in this region here leads to that reversal, or to this one over here leads to, well, it hasn't really reversed as of yet. Still mostly trending or trading sideways, but I do like the candlestick formation. I like the sort of impulsive move to the Bollinger Band, and then the reversal candlestick being confirmed by one of these indecision candles where you have a long-legged doji to the side that you want to reverse off, as well as a small body being formed as well. Okay, please do feel free to ask questions, guys. Do feel free to ask questions. Let me just have a quick look through. Yes, 1 minute, 5 minute chance, 30 minutes. Okay, why did you stop using this strategy? Time. I was sitting at my trading desk and I was trading this for about 6 hours, and that's when I had the time to sit there and concentrate for 6 hours looking for these setups, and I was looking for all 4 assets. And ideally, I've got a book at home, and I've got all my strategies that I've used in the past and what's worked, what's not worked. I've kept, collated its sort of, reward to risk ratio on average, hit rate, and how successful it's been over periods of time and what conditions it works under. So eventually, when I do have more time to focus on it, I'm always going to go back to it. I'm always going to go back to the strategies that I've used in the past. Yeah. Yeah. Okay, so let me move on. Right. The next point I want to cover is, okay, so the things you should know about Bollinger Bands. Okay, so what are the things that you should know about Bollinger Bands? Okay, let's start off with, first, you need to read the book by John Bollinger himself. I know one person on the training floor who has read that book. It's an insightful book. If you want to use this strategy, you must go to the source of who created this strategy, understand and read their book, and what types of strategies they used, how they applied it, why did they form this setup, and so on. And then from there, you can sort of you have a much greater understanding of this indicator. Right? It's always wise, rather than looking at, if the strategy doesn't work, rather than adding more to it, or adding more indicators, or adding different types of analysis to it, is how well do you know the strategy? How well do you know the indicators you're using? How much confidence do you have with the two indicators you're using? Right. So that's the first question I would ask myself. Yep. Um, okay. So remember, Bollinger Bands are a great tool, and it's for understanding how you see these wild movements taking place from these peaks to these troughs, and you're measuring this volatility and trading against this volatility. Right? And be aware of those tight bands, those tight ranges that takes place. When a trend does take place, you're often going to see how price is always staying with and testing the upper band and retreats slightly, may not always get to the moving average, but will always continuously stay with the Bollinger Band, or the upper band. So a perfect example is something similar to this. Yep. So you can see how this uses a pen. So we've had sort of the breakout to the upside of a hair, and then you're seeing how it comes and tests the moving average a couple of times, giving an opportunity to sort of get in over here. It does go into break through this high, a slight pullback, and thereafter it tests in this region, it tests there, and it tests over there. And then thereafter, that's where it flattens out. It starts to flatten out in this region here, and then you start to see, okay, more sideways action. Now, do remember, how often do markets trend? How often do markets trend? This is an important factor with Bollinger Bands, actually. Is how often do markets trend? A trendy market is only actually somewhere between 20 to 30% of the time. So that means if there is a rangy market, you should be able to capture those rangy markets often, right? There is a rangy market between 70 to 80% of the time. Yep. So even when there is a trend such as this, not always is that going to lead to now the reversal, right? In some cases, it may move just sideways, where there is opportunity for you to trade the overbought and oversold until the new trend begins or new information comes to the market, and you start to see sort of the next movement or the next leg taking place. So that is one of the benefits of trading the Bollinger Bands, is that there should be plenty of setups, as there is often more times that the market is ranging rather than trending. Okay, but there is that other strategy where traders want to trade the sort of with the trend, and you'll look. The opportunity I would suggest is when you wait for price. When you wait for price. Oh, let's do this. When you wait for price to sort of retest back to these moving average periods. Yeah. So when it retests the moving average, that's your opportunity to buy. If you're saying, okay, yeah, I'm going to buy off here, no, it has not retraced back to the moving average. Oh, I'm going to buy here. I want to buy it on every single dip. You can't go based on just the candlestick, right? So you can't just go based on a few candlesticks. You're looking at the very, very short-term sentiment, which is not going in line with the major sentiment, right? Remember, you want the short-term sentiment, which is those candlesticks, to come to a key area or key zone where the longer term or the higher time frame sentiment comes in line with the short-term sentiment for it to reverse. Okay, so wait for it to retest back to the moving average. Okay, right. So are there any questions in regards to sort of Bollinger Bands? Are there any questions to Bollinger Bands? Ooh, let's remove that. Okay, I'll give you guys a couple of seconds to respond in regards to, did you have any questions with the Bollinger Bands? So yes, again, you need to test what type of bands or parameters you want to select. You can use 20 and 2, which will give you a lot of opportunities. But remember, your standard deviation is not wide enough. You're sort of, you're going to see it often break through the Bollinger Bands on a regular basis. But maybe that suits your style, right? You want to be more of a sort of high frequency trader, right? Or you can go to sort of and test a sort of higher period, maybe a 30 or 34 with 3 standard deviations. And I do like on the 1 minute time frames looking at the 60 minutes, so the 1 hour's worth of data, in addition to 3 standard deviations, and looking for these extremes, right? Because I don't want to be trading sort of in these ranges over here. I want it to sort of get to that extreme where, look how sort of it tests that band. It just tests that band, and that's what leads to that reversal. Again, over here, there's another opportunity in this region here. Almost test that, but does not test that. Try and look for, in my case, I look at the RSI to confirm the setup, it also being in the overbought, oversold. So look for double confirmation as well. Just to clarify, yes, I look at the 60 minutes with the 3 standard deviation settings on the 1 minute time frame. Okay, cool. So that covers that. Right. So let's cover some of the assets that have been mentioned. I think there was Aussie Kiwi being traded. What's your position, Alex? Why are you trading Aussie Kiwi? What time frame are you trading Aussie Kiwi? So give me an indication. So guys, when you state, okay, I want to cover this asset, don't just tell me the asset. You got to tell me your time frame and your direction. Yeah, I need to know your time frame and direction. Okay, so you're trading the 15-minute time frame. Let's go sort of to the most recent prices. What I might do is just hide Bollinger Bands because I'm okay. And what's your direction? What is your direction? Okay, first thing I want to do, let's move up to say the 1 hour time frame. So go up to the 1 hour time frame, and what I want to do is start my analysis from some point. I'm going to start my analysis from the point where I see the current trend beginning. So in this case, so you see this uptrend, quite a large spike over here. This may have been sort of a monetary policy statement or some high impact news there. We see a large movement over here, reaches this peak, and thereafter we see a set of lower lows and lower highs being formed. Okay, so sort of my analysis starts from this high here, and that's where I start to apply my primary analysis. I always apply my primary analysis, even if I'm applying the Bollinger Bands, for example. In most cases, I will also apply my primary analysis and then apply the Bollinger Bands in addition to that. Let me just change the settings there. Okay, so we apply support, resistance. I'm looking for sort of key levels of support, resistance. Again, let's just go with high and lows. Okay, so high and lows. And then I'm going to apply the horizontal ray, just showing up to a certain sort of distance. Again, let me just adjust this. Okay, so looking for key levels. Okay, so let's talk through this. Okay, so we know sort of we had this uptrend over here, reached this peak, and then what's taken place thereafter. Okay, so you can see how price retraced down to this low, came back to retest the previous high, then a false break. Look at this type of candlestick there. Look at that type of candlestick there. What type of candlestick is that, guys? What type of candlestick is that? What type of candlestick is this? So it is a type of doji. So with the open and the close is pretty much at the same level. It has a long wick to the low. Well done, Cyprian. Well done. Dragonfly. So the Dragonfly Doji. Okay. So this is a key point to mention here, which is you'll often see a Dragonfly Doji, right? And that's telling you, oh, that means it's a strong reversal. Let me go long now. But you shouldn't go long, right? A Dragonfly Doji anywhere in the middle of a chart doesn't mean anything. Okay. It needs to matter where you've got these higher time frame key levels that you've marked out, that you've defined. So, being in this case, yes, it did push up a little bit higher, came back to retest those highs, but thereafter it lacked the momentum to really break this higher level, okay, higher time frame level. So we just saw a continuation in the sell-off, okay, and at that point over here, it did go into sort of break through this point over here. So broke through this key point over here. It done a slight break, and then it sort of came back above, waiting for. So you can almost assume that there was some profit taken in this region over here, or there would have been a large amount of buy orders that came in that try to push up, sort of up to this region here. But at this point over here, I mean, these sellers are now, strong. Okay, that's when they say, okay, no chance, you're not getting back up to those highs again. We're going through. So they went through, broke through this low over here, creating this new low over here. Now at this point, what happens? Market ranges, right? So it consolidates. It consolidates in this range over here, and that range is between 107.50 down to the 107.16.15 period. Okay. Right, so consolidate and ranges for a short period of time. Assume that you had a Bollinger Band around this, right? You could have, you could have been trading this entire section, looking at those, highs and lows and the reversal points. Okay, so yeah, so it ranges for a short period of time until new information comes out, or sellers eventually overpower those buyers, and we break through. It breaks through, and it goes into test a previous spike low, and again more buyers stepping at this point over here, a slight retracement, and then we have more selling pressure testing this low over here. So all the way through, apart from sort of this section here, we have a range of consolidation, but overall we have a primary downtrend. Okay, so we have a strong downtrend. Okay, now I can't even see this line, so let me just adjust this line. Okay, so to apply the trend line, remember, apply from one high, take it to the next high, and extend the line. Okay, so this area here didn't really come back to respect this region. It didn't actually really respect the resistance level. So the sellers are gaining some momentum there, right? Do remember that. So the sellers are gaining that momentum there. Wait to sold off at this point over here. And then now this is where we are. We're back in this zone over here. Now the question is, where do we go from here? Right? Where do we go from here? And you need to look at your options. Okay, so let's highlight some key levels or key points here. First thing I'll probably say is look how long the consolidation was here. Look at the 1 hour time frame still, but look how long the consolidation is. For a number of hours, it has stayed there. A couple of tests lower, but it couldn't break through at this point over here. Now the buyers have gained some momentum at this point over here. Now the question is, they were able to break through this zone over here. Okay, so they're able to sort of break through this one over here. And this is where you often see more buyers step in, right? So the question was, well, there's going to be more buyers that step in at this point over here, or now that the sellers have got through this point over here, now the sellers control this zone over here, and you see more selling pressure. In fact, it's neither. There is a balance between the buyers and sellers in this case over here, where it's now, again, consolidating on a much shorter time frame in this zone over here. But we're fast approaching sort of this trend line to see if we go on to sort of break through, break above. It may break above, come to this point, retest, and then form sort of inverse head and shoulders. Let's delete that. Or we may see price just break through. And there is the option where it could just break above, come back, pull back within the range, and then eventually break through. So for me, the key point over here is that I would still be bearish all up to sort of the 107.16 handle. Once we cross through the 107.16 handle, or even this sort of high over here being around 107.12, so between 107.12 to 107.15.16, this over here, anything below this is still a seller's market, still a sort of sell zone. That doesn't mean on the shorter time frame I can't take a trade from here to this point over here. Okay, but based on this time frame, I know that this is still a seller's market until we break this high. Okay, the other options are looking for that short back to test these lows over here. So let's move down to sort of the lower time frame, the 15-minute time frame, and what I can do is just delete. Oh, that's great. Let's see if I can undo that. I just want to remove some of these lines here. Okay. Just give me a second. Okay, so this is where you're now doing a little bit more due diligence. So one of the first things I tend to do assume that this is my base time frame over here, I'm going to be looking at the fib levels. So I want to take a fib. Where is it? So from the high, that's way into the low. Hold on, that's not just right. Open that up a little bit. Okay, there. So it's a 50% correction. So we've seen a 50% correction. The 61/8 of a hair, and just as easily, they can sort of do a false breakout, test the 61/8, and then eventually sell off, right? But at the moment, it's testing the 50%. I mean, on the very short term, on this time frame, I'll be looking now for the break through this low potentially. Okay, so we've seen the rejection twice at the 50 period moving average, the 50% retracement of the fib level, and now I'm looking for the break lower and to take it back down to sort of this region here. I'm not going to target the extreme low. I'm going to be looking to target sort of, something that's more realistic over here in this case. Okay, so let's move down to sort of the 5-minute time frame. This is where you want to sort of apply a little bit more additional confirmation. And this is where you say, okay, this is where I apply my time or price filter. I will also look at the type of candlestick that breaks through this level. This could also be seen as potentially a double top. Okay, so we could see on sort of, let's see if it's not much of a prior trend. It's a larger pattern being taken place over here. There is that. Now, if you're trading on the 5-minute time frame, 5-minute time frame. So if I apply this as so this is now my support, this is now my resistance. Now this could be sort of a rangy market here. So just as easily, I could be looking to sell in this region over here, take profit over here, or leave a little bit of that position on, or leave the entire position on, and let it continue and see if it breaks through this level as well. Yeah. So you could actually trade that rangy market as well. So quite a few options there for you. There is quite a few options with Aussie QE. Okay, and that brings us to the end of this webinar.